This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices edged up on Thursday after falling in the previous session, boosted by a bigger-than-expected draw in U.S. crude stockpiles and a general risk asset market rally. Brent crude futures were up 57 cents, or 0.9%, at $64.08 a barrel at 11:01 GMT, while U.S. West Texas Intermediate crude futures were 51 cents, or 0.9%, higher at $59.95. Both benchmarks rebounded after falling around 2% in the previous session after reports indicated the U.S. was renewing its push to end the Russia-Ukraine war and has drafted a framework for it, which could mean more Russian barrels being released into the market.
China's October exports of fuel oil, mostly for low-sulfur marine fuel bunkering, fell to their lowest monthly volume this year, customs data showed on Thursday. October export volumes were at 1.23 million metric tons, down 45% from September, but up 2% year-on-year. Premiums for low-sulfur marine fuel at key Chinese bunker port, Zhoushan, held at more than $20 a metric ton over Singapore bunker prices in October, according to market sources. Amid higher price premiums for China marine fuel, some demand diverted to regional hub Singapore, which saw a monthly increase in sales for October.
Moving on to the top news in the energy sector.
Onshore fuel oil stockpiles in major oil storage hub Singapore posted a weekly decline, but remained well above 24 million barrels, data showed on Thursday. Inventories for residual fuels eased 5.5% to 24.52 million barrels, about 3.86 million metric tons, in the week to November 19, logging a two-week low, based on data from Enterprise Singapore. The inventories continued to hover above a year-to-date average of about 22.5 million barrels per week.
U.S. energy firms likely pulled a larger than normal 13 billion cubic feet of natural gas from storage last week, according to the average estimate of analysts in a Reuters poll released on Wednesday. That compares with a boost of 3 BCF during the same week a year ago and a 5-year average build of 12 BCF for this time of year. In the prior week ended November 7, utilities added 45 BCF of gas into storage. If correct, the forecast for the week ended November 14 would decrease stockpiles to 3.947 trillion cubic feet. That would be about 0.6% below the same week a year ago and about 3.9% below the 5-year average for the week. Next, we have the top news in metal markets. China's zinc exports surged in October as domestic smelters turned to overseas markets amid a dramatic squeeze on the London Metal Exchange and weak demand at home. China exported 8,519 metric tons of refined zinc last month, China's official customs data showed on Thursday, up 243.8% from 2,478 tons in September. Exports were at 217 tons in October 2024. Behind the export jump was a squeeze in the LME zinc market, where stocks declined to 35,300 tons in late October, barely enough to cover a day's worth of global consumption.
Gold prices held steady on Thursday, as investors digested a delayed U.S. jobs report that showed better than expected September employment numbers for further cues on the Federal Reserve's policy outlook. Spot gold was up 0.1% at $4,083.95 per ounce, as of 9:25 a.m. Eastern Time, 14:25 GMT. U.S. gold futures for December delivery rose 0.1% to $4,083.30 per ounce. The closely watched Labor Department report, delayed due to the government shutdown, showed that September non-farm payrolls increased by 119,000, more than double the estimated 50,000 gain.
We will now look at the top news in the agricultural sector.
Global stocks of grain are set to increase during the 2025-26 season for the first time in 4 years, the International Grains Council said on Thursday as it raised its forecasts for both wheat and corn crops. The larger global harvest will more than compensate for the tightest opening stocks in 10 seasons, boosting overall supply by 3% to an all-time peak, the IGC said. The intergovernmental body raised its forecast for global grains production in 2025-26 by 5 million metric tons to 2.43 billion tons, outstripping consumption, which was projected at 2.40 billion.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.